FMDQ Group PLC, implementing partners of the Nigerian Green Board Market Development Program, hosted the Gender Bond Awareness event themed Gender Bond, Bridging Gender Finance Gap in Africa, in collaboration with Financial Sector Deepening Africa and the British High Commission. The event was to enlighten participants on the state of gender equality in Nigeria, and it also discussed opportunities for Nigerian issuers and investors to use gender-sensitive and intentional approaches in bridging the gender finance gap in Nigeria, as well as increase awareness and knowledge to sustainable finance and its impact on women's economic empowerment. Ms. Beatrice Eyong, UN Women Country Representative to Nigeria, United Nations Nigeria, in her presentation spoke on the gender disparity in the society and why finance is important to closing gender gap and achieving gender equality.
Financing pathway for gender equality and empowerment of women through the use of gender-sensitive, intentional approaches and gender bonds. This event aims to explore opportunities for Nigerian issuers and investors to bridge the gender finance gap. We welcome the opportunity to learn from the Tanzanian experience shared with us, specifically on navigating the issuance process of a gender bond. This experience will serve as a valuable lesson for Nigerian issuers, especially banks, to adopt and apply the best practices towards issuing gender bonds, which will help bridge the gender finance gap.
In a panel discussion, Ms. Bukola Rufai, Divisional Head of Operations, Securities and Exchange Commission, Ms. Adiola Ukoya, Coverage Manager, British International Investment PLC, Ms. Anne Okwego, Associate Director, PLC, and Ms. Jumoke Olaniyo, Senior Vice President, FMDQ Group PLC, spoke on the role of financial markets in strengthening gender financing in Nigeria.
We already have the social bond rules, which essentially cover the gender bond. But I'll also take the opportunity of sitting here and holding the mic to ask, what would the markets prefer? Do you want us to specifically have a gender bond rule? I ask because I think it's a bit, it may be, we try not to be too prescriptive so that we don't stifle innovation. And then if we begin to issue rules for every themed bond, then we'll have too many rules for the market, too many rules for people to comply with, too many rules for us to also apply in implementation. It's not a problem, but we feel that because the social bond rule generally covers issuances which are intended to address social needs or social problems, one of which, of course, is the issue of equality of women or the need to empower women or to address the needs of women generally. We feel that it is adequately covered. If you look at the social bond rules, we've already made adequate provisions. If you also look at some of the issuances that have been had, of course, outside Nigeria, I think the essential thing is that they ensure that their issuances follow the social bond principles of the ICMA, the International Capital Market Association.
When it comes to gender lens investing, BI acts as a thought leader. Prior to 2018, there wasn't much investment that was being done. There wasn't enough smart investment that was being done with regards gender. The diversity was there, the gender inequality was there. And you also had SDG 5. So what did we now then do? We went back and developed a toolkit with the help of FSD, which I will come to in a minute. And that toolkit is part of what we can do in terms of a pragmatic approach towards addressing gender bonds in Nigeria. So 2018, what did we do? We set up the 2X Global, which is a firm of about 90 firms. And what they've all signed up to do is to look at their investments towards a gender lens view. Numbers don't lie. The numbers show you that investment teams that have a gender diversity outperform the non-gender diverse teams by about 20%. Numbers don't lie. They also show you that VC-type firms that have women as part of their top management perform 25 times better, in 25% better than their contemporaries. So we now took us to the 2X Global. With the 2X Global, we were signed up to what we call the 2X Challenge. And what the 2X Challenge tries to do is to promote gender diversity, to promote economic emancipation for women.
I mean, we haven't seen so many gender bonds in the Africa region anyway. So there's the Jasiri one in Tanzania, there's the Morocco bond, and then there's also the gender-linked one in South Africa. So it's coming out in trickles since 2013 when the concept of gender bonds came to bear. But that said, we do have, I mean, like a few speakers have alluded to, gender financing initiatives, gender-linked investments, that the VCs would typically want to make sure they champion. And then we do have a few banks that have some gender-specific loan portfolios still at high interest rates and with very high barriers to entry. So that said, what we do know and do see is that empowering women would always be a plus. It would always have a ripple effect. I mean, if you look, you mentioned 42 billion, that's a huge number, and that is for real. And when you ask questions around whether we're forgetting women in the rural areas, and we are. I can answer that question based on the research that we have done. There's still a lot of work that has to be done in all of that aspect. But the bottom line is when you empower women, you're increasing productivity. Women are real agents of social change. You can't get it wrong.
I think there's a lot being done with regards to gender empowerment globally and domestically in Nigeria. If we look at gender-focused financing vehicles, empowerment programs, accelerator programs, there's so much. I mean, we heard the case of Arua Capital, which I follow, and very interesting case there. I think it's worthy to note that there's quite a lot done already, whereas may not necessarily be as a gender bond or a capital market program. There's so much smaller pieces that are required as well, already being done, that play a critical role in empowering and getting the whole journey for this gender empowerment that we're talking about. And I think one also critical part is where we say charity begins at home. It also starts with what is the diversity in the companies that we operate or we manage or we function in. For us at FMDQ Exchange, and I'll speak to the group as well, we sit in a very unique position where we have an intersection between corporate organizations and investors. And as a market organizer and an SRO, we obviously are prescribing requirements and guiding capital market operators and investors and anyone who wants to have an interface in the capital market on how they should behave and what will be required of them. So it behoves us as well as an organization to be seen to be doing what we say you should do. That is one thing we take very important in FMDQ, to the extent that we have 55% of our staff are female, 50% of our managing directors, 67% of our managing directors are female, and about 50% of our business executives are female. So lead by example is one way to go in the first instance.
Speaking with WebTV, Mr. Ben Llewelyn-Jones, the British Deputy High Commissioner, and Ms. Beatrice Eyong, UN Women Country Representative to Nigeria, United Nations, Nigeria, spoke to the importance of the gender bond to the Nigerian economy.
I'm really proud that through UK Aid and FSD Africa, our program partnering with FMDQ, we're able to support gender bonds. And I think what they show really, firstly, there's success in gender bonds, not least in Tanzania. I think there's one other country too that's done it quite recently. But the possibilities really for gender bonds to promote financial inclusion for women, and also really to bridge that increasing gender gap when it comes to financing for women and women business partners. So I mean, gender bonds it's one way forward. It's a really important way forward, and what we hope today will show is the possibilities for institutions to get involved in gender bonds, learn more about them, to issue them, and to really practically help bridge that gap. Because whilst it's good to understand the concept, I think putting it into practice is what we're about.
It's very, very important because as you heard, that if we continue the same pace, we're going to have about 130 years to see gender equality become a reality. And as you also heard, the African Development Bank has said that there is a gender finance gap of 42 billion US dollars. So people wonder why we have not achieved gender equality and women's empowerment. One of the reasons is insufficient funding for gender equality and women's empowerment. And we think that gender bonds could be actually a deliberate attempt to make sure that women's businesses have the required finances that they need, and that the women entrepreneurs have the requisite expertise to manage their businesses. So gender bonds is so interesting in that it does not just look at providing cash of money, but it also looks at the capacity and is also concerned about the impact of what they are doing. And with the example from Tanzania, we see very clearly that gender bond is not just a good way to bring about gender equality, but it's smart economics. So this event is very, very timely, and I think that it shouldn't end here in Lagos. I think we should take it to the states so that all of us can understand that there is need to step up the investment of investment in gender equality and women's empowerment. And as you know, we have 17 SDGs, and one is actually very key and central. That is SDG 5. And this SDG 5, we realize that the targets that were designed, by experts to make sure that we bring gender equality and women's empowerment in reality, those targets are not receiving equitable funding. So there are some of the targets that have funding, though it's not sufficient, but at least they have. But there are also targets that actually don't have. So that's why events like this are very important for us to discuss with all stakeholders to say, look, we will not reach gender equality if we don't step up the funding and the financing.
According to a report by African Development Bank, across the continent, African women entrepreneurs face an estimated $42 billion gender financing gap compared to men. We expect that the gender bond will serve as a contributor to the closing of the gender finance gap in the Nigerian economy and Africa at large.